Hello and a good morning. You tune into Market Cafe. I'm Ankita Saxena, and the next half an hour I'll take you through all of that transpired on the global front, how the markets moved, and of course, what's transpiring on the geopolitical front and the oil that is on the boil. Well, let's talk about the Wall Street and how that shaped up. Well, yesterday we saw cuts coming across Wall Street. Now, on account of two things. Firstly, we do have oil prices that remain elevated. We did see, a tanker that got struck off Saudi Arabia, and Trump has also escalated his threats to Iran. On account of that, we had elevated crude prices, and also on the back of a lot of earnings that have been trickling in on Wall Street. We had Alphabet that slid 3% in extended trading after Google parent lifted its forecast for 2026 capex plans. In fact, they've raised it to $205 billion, pointing towards a strong artificial intelligence demand. But remember, the investors are already cautious about how these hyperscalers are planning their capex around these AI themes. And on account of that, we did see Alphabet that was down and now 3%. We heard Tesla also that reported its quarter numbers. It was a miss that came on as far as the margin front is concerned. That slid, and also their free cash flow turned negative. So even Tesla was in focus on account of that. And we did see cuts coming across Wall Street. Dow Jones was absolutely flat. S&P 500 was trading down 0.1%. And NASDAQ saw the most rubbing. That was down more than 0.5% in trade. But like I mentioned, the oil prices, though, Brent crude is sitting above the $95 per barrel mark. 95.80 is where Brent is at. 1.8% uptick coming in right now. And WTI is also sitting with gains of 1.5% at $88.13 per barrel. So that's where the oil is at. So it's a fifth straight session of advances as far as the oil prices are concerned. But let's move on and talk about the Asian handover and what that really looks like. Well, we do see Asian markets that are really bucking the trend. We have S&P ASX 200 that is up in a way 0.7%. Nikkei that is trading up 0.7%. 478 points uptick coming in on Nikkei. Hang Seng is up 0.7%, but Shanghai is absolutely flat, though flip-flopping between the red and the green. It is trading in the red right now. But look at the implied start to Nifty. That is reacting to the oil prices. 100 points of a downtick is what we are expecting at the start of these streets. So a gap down start is what we are expecting this morning on account of elevated crude prices. But let's talk about back home and what's happening with the protests in Delhi. The Cockroach Janata Party protest has entered the fourth day. Sonam Wangchuk said he was willing to end his indefinite fast if the centre accepted the key assurances he had sought. It included a commitment that no punitive or retaliatory action would be taken against the students who participated in the ongoing protests. His statement came moments before the CJP separately said it would continue its protest until the government accepted its four demands. My colleague Bhavtosh is now joining us with the latest. Bhavtosh, can you hear us? What's going on there? What's the latest update?
Well, as far as on the ground situation, is concerned, last night again there was violence on the streets of Delhi. At least in central Delhi, 2 ACPs got injured. They were beaten up by the crowd. The crowd, in fact, attacked them, targeted them. In fact, Times Group has accessed videos in which a large crowd chased them, attacked them. Stone pelting happened. This started at around 8:30 p.m. and went on till 11:30 p.m. The police have said that these are stray incidents of violence, but as we can see from these visuals, that this was a targeted attack at the police officers. The police officers were later shifted to the hospital. There was large deployment of riot vehicles as well as paramilitary forces at Connaught Place, also at other parts of New Delhi. As far as what would be next happening as far as CJP is concerned, Abhijit Dipke has made it very clear that the protest at Jantar Mantar will continue till Dharmendra Pradhan puts in his resignation. The police on its part have said that there would be heavy deployment at Jantar Mantar. Metro services have again been stopped, at least at 16 metro stations in and around New Delhi, also at central Delhi. Internet services were also, in fact, shut down in New Delhi. The protesters on their part have said that action should be taken against police officers who indulged in high-handedness. Police on its part have said that 110 police officers suffered serious injuries. Police have filed 100 and have filed 10 FIRs, but no arrests have been made. Police have said that they will be taking help of FRS to identify those who indulged in violence, but so far no arrests have been made in this case.
All right. Thank you so much, Bhavtosh, for joining us with the latest updates on that news. But we'll let you go and talk about the geopolitics and how the US-Iran war is shaping up. They have sharply escalated their confrontation with Donald Trump, warning that the Washington would target Iranian bridges and power plants if Tehran continues attack on shipping in the Strait of Hormuz. Iran has responded by threatening to halt all oil exports through the strategic waterway if its infrastructure is hit, while warning that countries supporting US attacks would also become legitimate targets. The US has meanwhile launched a fresh wave of strikes, extending military operations into the 12th consecutive night. Let's listen in.
They're getting hit so hard, and they want to make a deal. But I say they're not ready to make a deal. Because every time they make a deal, they want to change it and everything. They're not ready. They'll be ready very soon. And this is despite this. It's going on. The stock market has hit 73 all-time highs since the election. Think of that. And the typical American's 401k is up by $34,000, setting records day after day. It's up by numbers that have never been seen before. So your 401ks, they always say, oh, the stock market. Stock market's very important.
And speaking of the stock markets, Alphabet delivered another strong quarter with second quarter revenue beating the estimates on the back of an 82% surge in the Google Cloud revenue. However, the stock fell in after-hour trade after the company sharply raised its 2026 capital expenditure guidance from $195 billion to $205 billion. The management said the demand for AI infrastructure continues to outstrip the supply, while CEO Sundar Pichai highlighted growing adoption of Gemini and fresh investments to stay competitive in the AI race. And speaking of the earnings, Tesla reported a mixed second quarter with revenue beating estimates, but earnings falling very short of the expectations. Revenue rose 26% on a year-on-year basis, helped by stronger vehicle deliveries, but the margins came under pressure as the company sold more lower-priced models and earned less from the regulatory credits. Free cash flow also turned negative, raising concerns over the profitability. And IBM reported a weaker than expected second quarter and lowered its full-year growth forecast, citing softer demand for its mainframe business. Revenue rose just 1%, while adjusted earnings also missed estimates. The company now expects 4% to 5% constant currency revenue growth in 2026, down from its earlier guidance of more than 5%. And the US has imposed a new 25% tariff on a wide range of Brazilian imports, escalating trade tensions with Latin America's largest economy. The duties cover products including farm machinery, wood products, ethanol, and apparel, and could affect between $7 billion to $11 billion worth of Brazilian exports. However, the key products such as beef, coffee, aircraft, and aircraft parts have been exempted. And the US and the Saudi have signed a landmark agreement to develop a civilian nuclear program in the kingdom, paving the way for a multi-billion-dollar, decades-long partnership. The deal gives America companies access to Saudi Arabia's nuclear energy market while committing both sides to nuclear safety and non-proliferation standards. The agreement will now go up to US Congress for review, though some lawmakers have raised concerns it could fuel a regional nuclear race. And India joined its Quad partners in calling for peace and stability in the Indo-Pacific, while reaffirming that Asia's centrality in the region and China's increasing military muscle flexing in the South China Sea. Besides Jaishankar, the Quad meeting held in Manila was attended by US Secretary of State Marco Rubio, Australian Foreign Minister Penny Wong, and her Japanese counterpart. Let's talk to Sumita, who's getting us more details on this Quad meeting. Over to you, Sumita.
That's right. The External Affairs Minister Dr. S. Jaishankar has held separate talks with Russian Foreign Minister Sergei Lavrov, U.S. Secretary of State Marco Rubio, and Chinese Foreign Minister Wang Yi in Manila. In fact, these meetings covered the safety of Indian seafarers, tariffs, energy security, India-China border tensions, and global developments. External Affairs Minister is in Manila for Quad Foreign Ministers meeting and other meetings that are related to ASEAN grouping. Now, first up, let's talk about the External Affairs Minister's meeting with Chinese Foreign Minister Wang Yi. He said that relations between India and China have been gradually normalizing. However, he reiterated that peace and tranquility in border areas is obviously the prerequisite for normal ties. He also says that this aspect will continue to need a constant attention. He also brought up the issue related to fair market access, and he brought up issues related to trade balance as well. And that he said that really ranks high in that regard. He also presented concerns about the predictability of supply chains. He also had a meeting with the U.S. Secretary of State Marco Rubio, where the two sides focused on trade and tariffs, energy, defense and security, alongside critical minerals and artificial intelligence. Now, important to note that all of these aspects are key pillars of the India-US ties, and of course these aspects have sort of been reiterated in the past couple of meetings between premiers of both the sides. In fact, this meeting happened even as the 10% tariffs that the United States imposed, they are set to expire on July 24th. In fact, the External Affairs Minister also stated in a communication that both sides exchanged quick perspectives on regional, global and multilateral issues of mutual interest. And then the External Affairs Minister also met with the Russian Foreign Minister Sergei Lavrov, wherein he reiterated India's strong concern related to the safety of Indian seafarers in the region. Now, this was raised after 4 Indian nationals were killed in an attack on the commercial vessel MV Golden Leo while it was departing Ukraine's Odessa port on July 19th. And in that regard, in fact, a Russian diplomat was also summoned by the Ministry of External Affairs.
Let's move on then and take a quick break. We'll quickly come back after the break and get you all the cues you need to watch out for before the start of Dalal Street. Stay tuned. Welcome back. You're tuned into Market Cafe, and we're taking you through all the cues you need to watch out for before the start of Dalal Street. And let's talk about the earnings back home. It was a good quarter for IndusInd Bank, with PAT rising 72% on a year-on-year basis. Though the NIMs missed the street estimates, management expects NIM pressure in Q2 while eyeing further correction in the microfinance asset quality. My colleague Mitali is now joining us with the highlights of the numbers.
Rightly mentioned, so IndusInd Bank, it has delivered a very strong set of numbers for first quarter FY27, signaling that its turnaround story is actually beginning to gain traction now. While the net interest income that came broadly in line with the street estimates, but the biggest surprise was on the operating front. The operating profit, provisions as well as the net profit, they all stood comfortably beating the street expectations, with profit after tax jumping nearly 75% on a sequential basis. Asset quality, it also continues to improve, with their credit cost easing to now 1.74%, reflecting normalization in their microfinance portfolio as well as a lower stress across their key segments that we have witnessed. However, one key metric that remains under watch is their net interest margin. The core net interest margin for this quarter was at 3.35%, down from the 3.39% that we saw in the last quarter, and this has missed the estimates due to higher share of wholesale lending as well as the secured retail loans. While if you see the reported NIMs, they were at 3.57%, enjoying the benefit of a one-time 284 crore rupees of income received from the interest on IT refund. But management has cautioned that margin pressure, it could persist in Q2 as well before improving in the second half of FY27. On the growth front, the bank appears to be turning around. Advances have risen nearly 3.3% on a quarterly basis, led by a growth of 7% in the wholesale loans, while the deposits, they grew by 3.7%. The management has maintained its FY27 ROA guidance of 1%, with recovery expected to be driven by 60% in the strong operating profits and 40% by the lower credit cost. It is also ruled out any immediate need for the equity raise as it maintains a healthy capital position as of now. Now, talking about the brokerages, they have a mixed view on the stock. MK has given a buy rating, 1200 is a target price, while Motilal Oswal, it remains neutral with a target price of 1125, which has been raised, and also Citi has raised its target price but maintains the sell rating. Overall, a strong quarter seen for IndusInd Bank.
Right, watch out for IndusInd Bank in today's trading session on back of the earnings. But another earnings candidate, Dr. Reddy, has reported a lackluster set of earnings for the first quarter of FY27. The revenue fell by over 5% to 8,070 crores, while the PAT saw a nearly 70% fall due to one-time charges related to a semaglutide API inventory issue and lower lenalidomide sales in North America. Reacting to the earnings, the pharma major said that the quarter marked a transition beyond the lenalidomide with the base business showing healthy growth. Let's listen in. And let's move on then. Hours after Trump announced the steep tariffs on generic pharma imports, Dr. Reddy, CEO Erez Israeli, commented on the development that moving manufacturing facilities to US within 2 years' time is neither sustainable nor practical. He expressed hope that the industry bodies will address the tariff issue. He also spoke on the impact of semaglutide supply disruption and why there is more pain ahead. Listen into this conversation he had with ET Now's Meryl D'Souza.
We just got the news today. Obviously, we understand that this is the beginning of the process. Today it was a tweet. And naturally, there will be additional discussion as we speak. Both the Indian Association as well as the American Association will speak with the relevant people to understand what they want to do and what they want to achieve. We've been in that process exactly the same time last year. Which resulted in exemption for the tariff. So I don't know how the outcome will be. Naturally, we'll engage in discussion. It's not practical to move all the production of India, United States. It's not relevant, not achievable. So it's about probably to take the right measures as they come. So we will obviously be engaged in the discussion. At this point, I don't see any further actions beyond that.
Okay, sir, understood. A little bit more on that. North America revenue does contribute up to 27% of your revenue mix, and it is a large chunk of which is generics-led, which this tariff structure seems designed to hit you disproportionately versus your branded and innovation franchises. Can you just give us a sense of how exposed is Dr. Reddy's US generics portfolio to this?
First of all, at the moment, there is no risk. Even in according to as we speak, there is zero tariff on generics. And even in accordance to the tweet, it's not going to happen in the next 2 years. So at the moment, there is no risk. And also, most of the product, if tariff will be imposed, will naturally, the cost will go up, the prices will go up. And like we discussed last year, if tariff will come, the price will go accordingly to absorb the tariff.
And let's move on to another earnings. Eternal remains confident of improving profitability across its consumer businesses, with management raising Blinkit's long-term quick commerce margin target while highlighting strong growth in the food delivery and going out services. Ashesha is joining us with the con call highlights and the brokerage verdict.
Well, yes, after reporting largely in line set of numbers, we have some commentary that has come in from the management via the con call that was conducted yesterday evening. And let's start with the quick commerce segment, where the management says that the long-term margin guidance now stands at 6% versus 5% earlier. That's for the quick commerce segment. They also say that competitive intensity has already peaked in the first quarter and it is now stabilizing. And management expects margin improvement with no near-term competitive pressure. So this is the guidance that has come in with respect to the quick commerce segment. Meanwhile, the food delivery NOV also grew by about 20% on a year-on-year basis in the first quarter of FY27. Management sees no trade-off between growth and margins, and pricing, however, for the food delivery segment continues to remain competitive. Meanwhile, going out segment NOV also rose by 60% YOY, and this was on the back of strong platform strength rather than seasonality. And this is what the company had highlighted in the investor letters also yesterday. So all in all, management commentary has also been on the positive side with some margin guidance increase as well that the company has talked about. But in fact, let's go across and listen into what the management had to say on this.
Over time, we have increased the capex per store in our business, right? And some of these investments are leading to increase in efficiency in the business. It's also a function of increase in average store sizes, etc. So all these investments are clearly lining up in a way where we have now higher visibility on the margins, and we think at this point that we're likely to end at the higher end of the range that we had guided earlier, and hence the communication.
All right, let's move on. Do watch out for Eternal in today's trading session, but a couple of other names to watch out for that will be in focus. And for that, my colleague Rabinder is now joining us with all the stocks and news.
Well, as it was a weak quarter for HPCL. Company reported weak set of number in Q1 FY27. Company reported an EBITDA loss at rupees 16,141 crore as compared to EBITDA profit of 8,978 crore on a Q-on-Q basis, and GRM rose sharply at to $23.8 per barrel, but weak marketing margins impact company's profitability. United States has also reported a strong set of number in Q1 FY27. Company's revenue has increased from 2,549 crore to 2,703 crore, and PAT has also saw a sharp uptick from 258 crore to 391 crore, and the other income aided the profitability growth for the USL, and other income has increased from 61 crore to 222 crore. NTPC Green has also reported very strong set of number in Q1 FY27. Company's profitability grew by approximately 39% on a yearly basis, and EBITDA margin has expanded from 88.7% to 89.4%, and lower finance cost aided the profitability, strong profitability growth. Shoppers Stop has also reported a good set of number where company revenue grew by 11.2% on a yearly basis, and net loss narrowed to 14 crore as compared to loss of 16 crore on a yearly basis, and revenue growth was mainly driven by the strong growth in beauty segment. Sona BLW2 can be in focus where Sona Comstar and Denso has formed two joint venture to develop electric and hybrid power train system. First joint venture is for passenger and commercial vehicles, and second joint venture is for two and three wheelers. So, back of this positive news flow, Sona BLW2 can be in focus.
All right, all of these stocks will be in focus on the back of this news flow. But with that, it's time to wind down in this edition of Market Cafe. I'll take your leave. Thank you so much for tuning in.